Good morning, guys. September 6, 2019. It's Friday, and the bull run is over already? Hold on. What happened to yesterday's? You had me at hello, Trump, Xi, love affair for October. Well, apparently the market already forgetting about it. 2978 is the new magic number, guys. The job report was the focus of this morning, and it wasn't good, which gives the Federal Reserve to actually cut rates. So you think the market would be rallying high on this news, but it's stalling out. And guys, be very careful today. Do not expect a crash. In other words, do not go and buy a ton of puts, because here's the highest probability today. Pay attention to this 2978. The market is likely to fluctuate plus 10 points above that number, minus 10, 13 points under that number, and it could be going sideways all day, playing around with your mind. And when the market is playing tricks with your mind, the best thing to do is to not let it get the best of you. Meaning, don't trade big positions, and instead of focusing on trading directional options on like the SPY or something, don't do it. Okay, just focus on trading individual stocks. We've got a couple of possible trades we're considering, guys. Oil begins to drop again, resuming its downward trend. It's down 2% back to the 54 handle. If you're tracking it with us on the CLF, that's the ticker into the Ameritrade again. So, guys, some really cool trades, though, are surfacing this morning. In particular, BYD and BGNE, our top two picks for this morning. And still staying with the BKNG trade, adding some more in that. Alexion announced some bad stuff in Europe about its drugs, so it's likely to drop. NTS, this is the one we're paying close attention to. We may be sending some information about this trade throughout the day in the group. Guys, with that said, I keep talking about oil, so I had some questions from various traders. So here's it is, guys. If you look at stock charts, the ticker in stock charts is going to be $ WTIC. This is the data as of September 5th, which was yesterday. You see how bearish this damn thing is, okay? There's just consistent downward trend. Here's a series of consistent series of lower and lower highs on this chart, guys. Notably, we don't have just one def cross, which was right here. This was your first def cross. We got another def cross right here, and we're fixing to go into a third def cross. I think after that, oil could easily be back down to this 51 level. As you will see, there's a bit of a difference in the pricing, right? There's so many different tickers for oil, so if you reference this, it's going to be 56.30 if you try to pull it up right now. But on your TD Ameritrade, we're tracking the price is going to be slightly lower, like 54. And of course, worldwide, the other part of oil is going to be about $10 higher from there. So the bottom line is this: with oil chart being this bearish, okay, the market is going to be having a very hard time finding reasons to rally from here. This is kind of like the hidden knife that's looking to stab the market from the back, and it could drop at any moment. I mean, with this bearish chart, guys, it may not take us very long to actually head for the drop off to this 51 level. And once we break about 50, 49 level, it's going to be all over the news. And in these type of conditions, we never had situation in the last 5 years where oil has been dropping lower in the 40 handle where the markets did not fall. So this gives us a pretty high probability that, yeah, maybe stuff can bounce a bit here as far as the market, but overall we're focusing on the markets going lower. Not because of the recession that everybody's talking about in the news, but some of the things that the charts are clearly pointing to. So with that said, yesterday we were talking about S&P hitting potentially this level. So was it an overshoot? Yes, the answer is today. It was an overshoot. This is what happened actually. This is a snapshot after the market closed yesterday. So here's that candle. As you notice, it's a bit of a bearish reversal type candle. As mentioned in yesterday's video, we were not destined to close at the all-time highs of the day. And so we've given up about 10, 12 points heading into the close of the day. Then actually after market, we dropped about 7, 8 points and we gained it back pre-market. But what we're looking for is a candle today that's going to resemble this. It's going to look like a red candle. So initially we may be opening. The market is up about 12 points right now, guys, as I'm recording this at the level of about 29.84. So I think maybe it's got a couple points more worth of room to go higher, but then it's going to reverse and drop. Target the level of 29.46, but 29.46 not today, but Monday or Tuesday. So like over the next 48 hours, there's a good probability the market will reverse touch this blue line on the way lower, and then we could just stall there. But don't expect it to do it all in one shot, but do expect the red candle to be actually created on this chart after the day is over. So major shift in the trading tunnel is just a quick overshoot was the question of the day yesterday. We're getting the answer that yes, it was just an overshoot. 2978 is the new magic number. You can see how we've been going sideways right around that 2978 all day, predominantly yesterday. Okay, these are some clear signs when we're getting to analyzing the market moves. They're clear signs of a top, like some behavior of a 6 and 11, especially towards the end of the day. We had a spike in volume on the sell side going into the latter part of the day. So this actually is what's about to happen to the market next. So target this area of 29.46 over the next few days, but make sure you use this level 29.78 as a level where you predominantly short, not buy calls. Top trade of the day, BYD. Remember yesterday in the not yesterday, but last week in the group, we've talked about shorting BYD. We were bullish because we were expecting the short squeeze. We had a target at 178, then we lowered it to 172, and when we got to this 169, 168 level, we told you, hey, go ahead and short this thing, reverse the position into put. So since then, officially it's down about $13, $14, so congrats to you guys that took the trade. Now, the cool thing is, for the first time, we're actually getting one analyst that's brave enough to put a sell rating on this thing, and the stock is reacting. Not on huge volume, it's down so far about $5 pre-market on about 51,000 shares. Not a bad start. Ultimately, remember that BYD has very strong support level around 150. So when you're looking at putting this trade, you want to wait for a bounce. So in other words, don't just get in when the market opens. Wait for a bounce. Let's say it bounces back to 158, 159. Boom. Put your short position right now when it hits that level, and then make sure you don't buy 150 strike puts. Okay, because that's where it's likely to stop. So buy 158, 156, 155 strike put in the expectation that it will hit 150. Now going into the next week, clearly we can expect the next support level in the stock is 145, and the ultimate support level is about 135 levels. So if you're splitting your position, trying to manage it best, buy some options for today in the expectation of the stock hitting 150, buy some options for next week in the expectation the stock is going to go to 145, possibly 135 if the sell-off accelerates. Here's another interesting trade for today, guys, is BG&E. 130, 125 puts is what we're considering. The stock pre-market trades about 129, 130, so ideally we want to buy in the money, very close to the money. The interesting part about Biogen Therapeutics or pharmaceuticals, it's got this overall move 11 going on as far as a 2-year chart. And you can see just like the price of oil. I mean, these charts are very similar. No depth crosses here yet, okay? Not on the weekly chart, but a very consistent downward trend created by consistent series of these lower highs here, guys. And this time looks like we are just under that level of 130 again. Now, it looks like it's got a pretty strong support line around 120, but we do think the support line will be broken this time. We can easily see the stock at 110, possibly 100 level. So our first target is 110, second target is 100. So looking for about a healthy $30 drop here, right about the time when MACD is reversing, about to form the death cross. Some people have been accumulating buying the stock, but we think that trend is about to reverse. We're looking for a total TRO of BG&E right here. If you look at the daily chart, oh boy, this does not happen very often, guys. Check this out. We got a head and shoulders on RSI. Whoa, and if we look at MACD, we got a head and shoulders on the MACD. And if we look at the accumulation distribution, we got head and shoulders even on the accumulation distribution. Whew, what a beauty. Gotta print this thing out in high resolution, frame it and put it in my kitchen somewhere. Look at this. Man, what a beautiful thing here. Okay, and when you look at the triple top, acceleration and volume yesterday, likely to be followed through. And if that does materialize, we're going to get from a bullish cross, what was just formed, it's going to fail. And from a bull cross, we're going to go to a very fast bear cross. Very, very fast here, guys. So very good looking trade there. Yesterday's market move was a 1 with a clear behavior of a move 6. We're locking in as a 1 with a 6 in the brackets to make sure we understand that behavior. Let me break this down. So initially the market gaps up, goes straight high in straight line. So it gaps up, opens high, continues high, and finishes high for the day. But if we break down the intraday action, we here clearly have a behavior of move 11 when the market drops, creates this pyramid formation right over here. Not very significant because it's not a huge pyramid, but what was more important, this is why we logged it in as a move 1 with a characteristic behavior of a 6, is because this sell-off, as the pyramid was happening, there's not a whole lot of volume going on, but in the move 6 behavior here, we did have a huge spike in volume on the sell side going right here in the last 30 minutes of the trading session. 2-day sequence is 7-1, 7-1, that's how it looks on the chart. So buy the dip, huge gap, buy the rest of the day, throughout the day, with the exception of the last 30 minutes of the trading session. 5-day sequence, 7-2, 3, 7, 1. So yesterday we mentioned, hold on, this could be just one day before the gap up higher. So if we do gap up higher, this is going to be the last gap up in the sequence, which creates a perfect opportunity to come in and buy some puts. Now, because we're not expecting the market to crash, do not buy directional options out of the money on the indexes, because that may not be a great strategy in case we could be heading to what appears to be, with the VIX in the 15 handle, it could be a move 5. And move 5, you don't want to do a lot of directional trading, guys. So with that said, this is what we got pre-market. Pre-market, market is happy. As a matter of fact, 29.86 at the point I'm recording this, and 29.86 is likely to be reversed first to 29.78. 29.78 is like the point of gravity. The market just wants to go there, just drawn to it. Anytime it goes just above, beyond that level, it's going to drop to that 29.78. Anytime it's going to go maybe 7, 8, 10, 13 points under, it's going to be gravitating back to that 29.78. So just keep in mind, 29.78 is kind of like the magnet right now. And any overshoot or undershoot under that could just end up, we can end up today at 29.78, guys. So with that said, do not put some crazy positions. When the market opens, expect a reversal like in a move 2, but don't expect that reversal to be huge because, again, there is a probability of a move 5. If the market drops, then reverses, we could actually be heading to a move 11. So those are your 3 top probabilities for the day. It really pays to focus on some particular options that we've discussed, like Alexion, BKNG, BGNE, okay, and clearly BYND is likely to be our top pick for the day, along with BGNE, guys. So with that said, VIX made another drop yesterday, and currently pre-market is actually trading under 16. So at this point, VIX is under 16, and it is downtrending. So overall, in this type of environment, you would want to actually buy calls in the money. However, I think this could be just a bit prematurely, considering that we went in the VIX really fast. When we consider rate of change, ROC, R-O-C, the rate of change from 21 to 15, too fast. We're about to slow that move down. Specifically, when we analyze the S&P chart, we got a circumstance where S&P gaps up higher, or at least at the time I'm recording this, it's set up to gap up higher. One last time, or the third time in a row, 3 consecutive days of gap ups higher in a row, likely to result in a reversal. And if the market reverses, then VIXs will reverse higher. So keep that in mind. Key takeaways: upside is limited. Sideways to lower has the highest probability. Target 29.46 over the next 48 hours. Expect profit taken between 2 to 4 p.m. as in yesterday move 6 stop behavior. Considering that, it may be a wise idea to wait to put on some positions till about 150. Get these options super cheap for high potential profit returns by 4 p.m. Guys, stay sharp. Trade like a rock star. I'll catch you on the next trade soon.